Why now for quantitative investing? I think it's an extremely exciting time with the really explosion availability of data. I think that really sets up quantitative investors for a really interesting future.
Ori, thanks again for taking the time to discuss quant investing in emerging markets today. Over 25 years at the firm, what's been the most transformational evolution that you've seen in quant investing in EM over that time frame?
Yeah, so I would say that, a lot of the evolution that we've seen in emerging markets is very consistent with the experience we've had in developed markets going back for over 30 years. And really it centers around two things: data sourcing and data science techniques and the advances that have been made in that area.
Let's push on the data bit for a moment. There's said to be an ongoing data revolution in emerging markets. We've even talked about a quant renaissance. Can you expand on that a little bit?
Yeah, and often when people think of quantitative investors, they think of investors that can model a broad set of securities, but in a more generalized fashion. And the growth in alternative data has really provide a very precise view into what's going on at a company at a very granular level. And it can be from covering information on commerce transactions, it can be based on patent filings, it can be based on geolocation data. And so it's a very exciting area in terms of bridging the gap between the precision of information that you can get at the company level while still being able to look at a very broad set of securities.
The traditional view is that to have success in emerging markets, you have to have boots on the ground. True? False?
Yeah, I think that's a common perception when it comes to investing in emerging markets, and a lot of that has to do with headlines. Often you read about countries and very idiosyncratic events that are occurring within those countries that can create a lot of consternation for investors. And what we found is that sometimes the impact of those headlines is overblown from an investment perspective. And so our view is that the boots on the ground is somewhat of an overrated perception, and that you can gain a lot of that insight just by using advanced quantitative methodologies.
And with so many quants now utilizing alternative data sets and new data science techniques, is there an increased risk of crowding for quants in general?
Yeah, what's interesting is that would be potentially a concern, but what we're observing when looking at the returns of quantitative managers is that the dispersion, the standard deviation of those return outcomes has actually increased in the recent past. So as quantitative managers are gravitating towards broader use of alternative data, new data science techniques, in fact, what we're seeing is a widening out of the return outcomes. And that's largely driven because there is a differentiation in approach. Some quantitative managers are still more reliant on traditional factors, while others, like ourselves, have pushed more in the direction of idiosyncratic alpha sources.
Emerging markets are often perceived as unpredictable due to geopolitical events. How do quant models effectively capture that, and is human oversight needed?
Yeah, it's very hard to predict sort of one-off events such as that of that nature. For example, in the recent past, you could look at Russia as an example. But what we try to provide some insight into those types of events and risks in the portfolios is by having portfolio managers overseeing specific strategies. And so they become experts in the strategies and in the countries that are encompassed within those strategies, and really trying to identify situations where potentially there is a mismatch between the model's capabilities to identify, successful companies and what's going on at a country level. The other approach is through trying to get a better sense of the macroeconomic environment and how that might relate to prior environments, and hopefully from that gain some insight into what we could see going forward.
Finally, why now for quant investing in emerging markets?
Yeah, I would actually even broaden that and say, why now for quantitative investing? I think it's an extremely exciting time with the really explosion availability of data that's allowing quantitative investors to bridge the gap between the generalized skill of their historical quantitative models and the ability to really hone into companies, understand really specific dynamics that typically were the domain of discretionary investors. I think that really sets up quantitative investors for a really interesting future.
Ori, thanks very much for your time today. We appreciate it.
My pleasure.